the S&P 500 as we get ready to trade February week 2. Here is our roadmap. Here was January week 4 where we set our current 2022 low and back tested it twice with 42.87 and 42.92. We ended the week 2 weeks ago with a close just below the 200-day simple moving average. I thought that was very bearish. Come Monday, yes, we did test down into Friday's low, but we found buyers and we took off for this massive rally on Monday of the week we just traded. Followed through on Tuesday, followed through on Wednesday, breaking out over the 20-day and the 100-day simple moving averages in closing. But then on Thursday, after seeing the absolutely terrible Facebook earnings, I think we were flying here on the back of good Google earnings, and then on Thursday we got Facebook and Qualcomm, and both of their earnings were not good at all, and we wound up gapping down open and selling off, giving back all of Wednesday, all of Tuesday, and getting down to the halfway back point almost of Monday's big rally day that sort of initiated the week. And then on Friday, to add insult to injury, we tested down even lower on Friday, but we got down to the 10-day simple moving average, tested and held above that, and took off from there to rally back on the day, rally back all the way up for a look above the 20-day simple moving average, but making a lower high against the day before, and then found sellers into the close. Let's take a look at that move on the intraday chart. Here's where we opened on Friday, set our initial balance high, broke down our initial balance low, set our low of the day right here between 11 and 11:30 Eastern. At this point in the day, we had been watching the 4,600 calls since the open. We were seeing them hit the, look above the $11 window here up into the high of the day. They lost the $8 window here when we broke down below the initial balance low, and Monday's halfway back. That's right where the initial balance low was. And then I said, they're going to hit the $5 window if we get all the way down here to this 10, 200-day simple moving average combo. They did not get any lower. They sort of stuck the landing here between the $8 and the $5 window. We turned, they regained the $8 window. Once I saw that, I pulled the trigger as posted on those 4,600 calls and bought those across several accounts. So I'm long those 4,600 calls, but as the day went on, I knew I was going to be back and forth from my screen. I threw an order on to hedge those calls, not just let them go, but to hedge them so I could hold the position a little longer, because I think we're going to get some good volatility this week. Put in an order to short the 46.05s, one strike higher, so it would put me into a long call spread. And I wanted to short those if they hit the $11 window. So I set up different orders in the $11 window. For those filled, so that was great. So even though we gave back all this stuff at the end of the day, I'm still up quite a bit on that position because I have a credit in it. I am short from the 11s, the 46.05, and long the 4,600s from the $8 window. So I'm going to make money on that position even if I do nothing this week. However, if we sell off a little bit on Monday morning and hold a higher low against Friday, I'm going to cover those 46.05s and just be long the 4,600s. If we break down below all this stuff, I'm just going to stay put in what I've got and see where the lows take us. Maybe cover those 46.05s down there and add something to the 4,600s, or use those profits to buy a much lower strike and see where the week takes us from there. But just wanted to explain where I was at on my trades. Let's take a look at another chart to talk about where I think the week is going to go. The big main event is going to be Thursday with the CPI data. We are going to see, I think, a big move one way or the other going into that, and then we're going to see that risk come off on Wednesday heading into the CPI data print that's going to be on Thursday morning pre-market. I think if we come out of the gate strong and just blast on through the 20-day simple moving average, we're going to easily get above the median line of our brand new bull fork. By the way, this bull fork, it starts with I'm not even going to show it to you because Thinkorswim messes with me on the weekends and doesn't let me scroll my charts nice and smooth. The first handle for this new bull fork is the October Q4 2021 low, which was a huge point for us that we were looking forward to hold here in January, and we only broke through it for the one day here with our January low that took us down to 42.22. So that is the first point on the fork. The second point is the all-time high we set up here on the second trading day of this month. And then the third point on the fork, which draws it out, is the low from January, the current 2022 low at 42.22. And here was our median line. Our high for the week that we just traded, the one on Wednesday, was an open right on the median line and a blast off above it and a close above it, and then that gap down open and failure to take out the 20-day on Thursday and sell. So if we come out of the gate strong on Monday, we're going to take out the 20-day and hold it. And then we're going to move on to the median line and take that out and hold it too. The median line is intertwined with the 100-day simple moving average. On Monday, it's going to be around 45.77 to 78. If we see a print and hold of our friend, Mr. 45.80, an 80 handle rule level, I think we'll easily take out last week's high, go for that 50-day and try to close above it. If we can close above the 50 days on Monday, I think we're going to continue to rally on Tuesday and maybe even into Wednesday morning, going after this set of failed bounce highs from earlier in January. This was the first leg of the January sell-off. We bounced going into the Fed minutes and then read those Fed minutes and sold off into what is the January low. Well, I think we're going to go after this bounce level in here. I don't think we're going to take it out. I think we'll get near it, and then we'll start to sell off on Wednesday, and maybe the sell-off will be back down to the 50-day. Maybe it'll break the 50-day and come all the way back to the median line. Or maybe it'll break the median line and come all the way back down here into this range that we set on Friday. That's the way I think it'll go if we're bullish. That risk will come off Wednesday afternoon, okay? If I'm wrong about this and we just come out of the gate weak on Monday, we'll know it because we're going to break Friday's low. We're going to break and get stuck below this 10 200-day simple moving average combo, and then we're going to sell off instead down here to the bottom of this new fork, which is going to take us down under this 42.92, 42.87. These were the two lows that we tried to show support with after setting the 42.22 low that same week. I think those will break, and then it's around 42, high 42.50s to the low 42.60s as the week goes on. That's what's going to hold the bottom of this fork and set the higher low against 42.22. If it goes that way, the risk that comes off on Wednesday is going to be a rally back up again. It'll be a short covering rally because nobody wants to stick with their bets going into that data point. If that data point is not as hot as we think it's going to be, then nobody wants to be short and get their ass handed to them on Thursday morning on the open, short a bunch of S&P, puts. I'm sorry, long a bunch of S&P puts and short a bunch of S&P calls. Okay, so, and the same thing is true that if we rally, nobody wants to, have their ass handed to them from that side either. If that data point is really hot and we sell off instead. Okay, so that's the way I think the week is going to go. I think it's probably going to go the strong way. But if it doesn't, that's fine. We'll take a look at some puts on Monday and see where we're at from there. Here, let me show you the options. Here's where we ended with the options on Friday. Volume leader, one of the volume leaders, the 4600s, 4550s, 4520s. When I see this volume, I see that as either profit taking or shorts. So with volume all the way up here down to the 4500s, if I am wrong about the long side come Monday, it's going to be because these were call sellers and they've got the power and they're going to push us lower. However, there was lots of volume here also in these 4500 puts. So if the put sellers have the momentum, we're not going to see the south side of 4500 and we're going to rally because they're collecting this credit here at this 4500 on the put side. There was volume as well all the way up here to 4650. And then you can see all the way up here at 4,700. And that rhymes with my idea of going after that ill-fated bounce high from earlier in January as we were going into the Fed minutes. Okay, those are my thoughts on everything. And that's it. I hope you have a good rest of your Sunday. Hope this video helped you out. As always, good luck and good trading.